Starticus are in Belfast and we're delighted to be talking to the team at Tughans. Tughans is one of the largest leading commercial law firms in Northern Ireland, and they've been operating here in the city for 121 years. Through a series of Starticus chats, we'll be talking about many of the legal fundamentals a startup will need to know as they grow and scale their business. I'm delighted today to be joined by Paul O'Brien from Tughans Solicitors. Paul works for the investment team. Paul, thanks for joining us. What are the type of investments that or finance options that a tech startup could go for?
Yeah, sure. So there's any number of different funding options available for startup companies or for growing companies. It really depends on what the company is looking to achieve from that investment, but just running through a few of the options, I think a lot of tech startup companies and newly formed companies will be quite familiar with the term bootstrapping. So they have to make the money go as far as it can possibly go. They'll generally sort of fund themselves for the first bit, be that from their own sort of savings or another job or whatever that might be. A lot of early stage companies will also maybe call on friends and family for sort of a loan or sort of an investment. And I think historically the most traditional form of funding was, if you wanted to get money, you went on the door of the bank and said, "Can I have a loan?" Obviously, with recent times, that wasn't always necessarily an option, and companies started turning to sort of the local investors. And I think we have a great local investment ecosystem, and there's any amount of opportunities within that. So my advice to any sort of startup company would be, if you are looking for cash and you're early stage, there are many opportunities out there to look for grants, look for opportunities to maybe participate in competitions and win prizes here, and at the same time raise your profile. So Techstart do a proof of concept grant, so you can apply, you go through your process pitch. If you're successful, then you can get a grant. I think anything up to 25 grand, and that essentially gives you a bit of cash, a bit of runway to try and go off and prove that your business has legs, essentially. Beyond that, there are, the local investment community is, we have a lot of good local funds, and we have a lot of good local individual angel investors, who are all very active, all very keen to support the local entrepreneurs and grow businesses. And we're starting to get a lot of interest as well from funds from across the water, from down south. So we've had BGF have done a few investments, along the Vce Fund they've done a few investments recently. MML and Dublin have done a couple of investments as well, and a successful exit. So yeah, there's plenty of opportunities out there for fundraising. They're the more traditional routes. There's what are, I think, known as alternative sort of financing options, but are probably becoming less alternative as time goes on. So crowdfunding, for example, everyone's familiar with the term crowdfunding. I think it's come on leaps and bounds over the last sort of few years, and we've had a few sort of companies locally who've gone through that process and have done quite well out of that process. There's different types of crowdfunding. It all depends what you're looking to achieve from that. And in addition to that, there are other sort of local firms that provide alternative sources of financing, such as asset financing or invoice financing. So there are plenty of opportunities out there. I think it's identifying which is the best fit for your business and what you're looking to achieve from the investment and the investor.
So that's a good way to lead on to obviously what I was going to ask next, which is there's so many options out there for tech startups and businesses as a whole, to be fair, in terms of financing. How do you find the right type of investment for you? What is the right option?
So it really does depend what you're looking to achieve. So if you want a cash investment, you just want the cash and you want to be left alone, then you're going to go down a particular route. If you want the cash but you place a lot of emphasis on maybe the support that an investor can bring and the doors that they can open, then you'll go down a different route. So if you just want cash and kind of be left alone, a bank loan, for example, might be better suited for you. If that's an option, you can get a bank loan. The bank may insist on certain bits and pieces, but for the most part, you've got your money and you go about your business. The flip side of that is you're going to have regular repayments. You're going to be paying interest on that loan. If you want more than just a cash injection, then if you were to go down the route of looking for an investment, be that from an angel investor or a VC fund or whoever it might be, they can bring a lot more than just here's some money and off you go. So the local angels, for example, these are the kind of people who they've been there, done that, they've grown a business, more often than not exited successfully, and they're now looking to support something that maybe they'd be quite interested in, and they want to go on that journey with you. So in addition to the cash, they bring their experience, they bring sort of the lessons that they've learned through running their own business, and they can also open doors. VC funds, a bit of an overlap there, very similar. I mean, VC funds it's essentially it's a team of experienced people who spend their day job like trying to help companies grow. So you've got a wealth of experience there. You've got sort of the lessons that they've learned through the various businesses that they've maybe done, sort of grown themselves, or the businesses that they've invested in and taken, sort of been taken along on the journey. With the VC funds as well, it's probably not as appealing as the sort of the contacts and the like, but it brings a bit of corporate governance to the company and brings a bit of structure. So they're going to insist on you give them certain information, so you provide monthly management accounts, you hold regular board meetings. So it kind of brings a bit of structure and a bit of formality to the process. Crowdfunding, I mentioned there are different types of crowdfunding. There are different benefits that come with each. So you've got equity crowdfunding, where essentially you sell shares in your company. You've got debt crowdfunding, where you borrow money essentially, and then you've got reward crowdfunding, where you sell a product or you reward people for investing in the company. And each of those bring different things. I think for product-based companies, it can be a great source of funds, but also raising awareness of your brand, raising awareness of your product. You're selling your product, and people are buying it. And I think there's an element of, I was in there first, and I got that before everyone else. So
I think a lot of people use product, obviously the crowdfunder, or the product, that the reward-based crowdfunding, as an opportunity to really test their audience for what they want to get, and they end up getting maybe $5,000, $10,000. It can be a massive way of driving pre-sales. Yep,
absolutely. And pre-sales, and then all of a sudden you have a book of 5,000 customers or whatever it might be. So, and hopefully then repeat customers as you sort of roll out your next product or whatever. The
pressure is then making the stuff.
Yeah, so there's demands that come with that as well. So you have to be able to sort of fulfill your orders. And I suppose the crowdfunding you have to be aware of. I think it's some people might think it's very sort of easy. You do a wee video and you post it, and people come. But I think in the background there's an awful lot of legwork goes into a crowdfunding campaign. You need to have a good product to start with. But then I think you have to really drive that campaign forward and really champion it. Totally. And if it doesn't succeed, then it hasn't succeeded in a public forum. So there's that to bear in mind as well. But again, you learn lessons as you go along. So they may not succeed because they haven't been prepared for the process, and they'll do it better the next time around.
So one would assume your role, obviously working in the investment team, would be that you help those startups to shape those decisions. Would that be fair, or to shape them on that journey whichever way they choose?
Yeah, so we try to engage with, we like engaging with startups as early as possible in the process, because we appreciate it's not a lot of startup companies it might be the first time that they've done it, and a lot of the stuff that we talk about when it comes to fundraising at the outset, it can all be a bit alien, and that's a steep learning curve. So yeah, we'll try to we like to engage as early as possible in the process and act as a sounding board, and give people a steer as to sort of what your options are, what you should be considering. So like look for grants, get out, talk to the investors, and see what's what. Speak to other people who have been through the same process. So generally, like startups will they'll come together on
Yeah.
many an occasion at different events. So speak to people who are in the same sort of same position as you, or who have recently been in the same position as you. Speak to them, see what sort of lessons they have, if any words of wisdom, see if they've been opening any doors. But yeah, we would like, I mean, we enjoy sort of getting in at the early stage and helping helping advise people sort of what you should and shouldn't be doing.
Okay, so following on from that, what is the legal process for raising or looking after managing an investment?
Okay, so probably before lawyers get involved, you will have you'll have gone for a fair few coffees, you'll have done a fair few pitches, you'll have been honing your business plan, it'll have been scrutinised, you'll have had lots of conversations with your investors, and hopefully at the end of that you've got an investor who is willing to invest. And the legal process would then sort of start with a term sheet, which is essentially a short form document, a few pages long, which sets out the headline terms of the investment. So what the investor is, how much they're going to invest, what they're going to get for that, what rights they want as part of that. And it's at that point then lawyers may get involved in the term sheet, but the legal process sort of formally kicks in after that point, when the term sheet's signed and the lawyers are sort of given the green light to go ahead and start drafting the documents in respect to the investment. So I'll get a term sheet and I'll start drafting an investment agreement, which essentially sets out, it's a longer form of the term sheet, sets out the terms of the investment, how much they're investing, what rights they want, what how the board's going to look, what information needs to be provided, things like that. Alongside that, there'll be a set of articles of association which will be tailored, and they'll set out rights attaching to the different classes of shares, and that'll largely sort of mirror the investment agreement. And then alongside those sort of key investment documents, you'll have a disclosure letter. Now, as part of the discussions that you've been having with the investors, probably from before the term sheet stage and continuing through the legal process, you'll be doing, the investors will be doing due diligence on the company. So they'll basically be asking questions about the company, asking to see copies of documents, copies of contracts. They want to know basically what they're getting involved in. As part of the legal documents, the investors will ask for a number of warranties, which are essentially statements about the company. If they aren't true, then you as the company tell the investor that they're not true, and that's done in a disclosure letter. Beside those documents, there'll be a handful of sort of periphery documents, and the investors will want to make sure that you have an employment contract in place. So there'll be an employment contract for the founders of the company and for any other employees. Generally, there'll be a document that assigns any IP. The investors will want to know that the company owns the IP and that it's not the individuals. So all of that is basically, that falls to the lawyers. There'll be a couple of drafts sort of backwards and forwards between the lawyers for the investors, the lawyers for the company, and at the end of it, money transfers and everyone's happy.
Bingo.
Yeah.
So finally, what are the benefits of having a legal partner in place to deal with that investment or help you along that investment process?
Well, we like to engage with early stage companies as early as we possibly can in the process. We think that there's a lot of value from that, because it kind of helps streamline things as the investment progresses. So if you engage with a lawyer fairly early on and you're able to then identify what sort of things you should be looking at and what an investor will expect to see as part of the due diligence process, we think that we can help steer clients and startup companies to make sure that they're doing what they need to do to make the process as pain-free as possible. We're very conscious that sitting down with a lawyer is probably not top of the agenda for entrepreneurs who are very busy and trying to actually start their own business. My advice would be have a conversation. Like, we would be more than happy to sit down with any startup company and just have an informal conversation, act as a sounding board, let them ask whatever questions that they want to ask. We'll tell them we're conscious that, as well, when you sort of say you should speak to your lawyer, people automatically think cost. We're conscious that cash is a priority for early stage companies, so we're more than happy to have that initial meeting, have a conversation, and we'll be able to we understand that certain things will be more of a priority than others, so we'll be able to tell you what you should focus on more, and what is probably less of a priority that can be pushed down the line and be dealt with at a later point. But I think, yeah, absolutely having an initial conversation, get a feel for what you need, and I think Tughans would be more than happy to do that.
Take it from there,
yeah, and we're happy. I mean, we kind of look at the long term as well. Like most of the companies that we sort of have taken on as startup companies, you kind of feel that you're going with them on the journey and the process. So the initial, I mean, we appreciate initially there's going to be an awful lot of uncertainty for them, and they've an awful lot to sort of take on. But when they get to that investment, hopefully you can support them through it. And we've acted for a number of companies from a corporation to exit over the years, and it's a nice story, and it's nice to be part of it.
It's really exciting, and obviously, you mentioned there's a lot of uncertainty in the startup world, and I think obviously the facilities, any facility that offers clarity to what is quite an uncertain type of business to be in is a good thing. Yeah. So from that angle, obviously, I think Tughans and obviously organisations similar to yourself that kind of support startups on that journey from beginning, hopefully through to scale. And if you get to exit, happy days, then that can only be a good thing for the ecosystem as a whole. Yeah,
absolutely, agreed. And I suppose that goes beyond just lawyers. Sort of your accountants and your financial advisors, surrounding yourself with good advisors who are willing to sort of work with you and be part of that journey. Yeah, I think there's a lot of benefits to take from that.
Welcome all. Cheers. Thank you ever so much for your time today, Paul. Excellent. All the best.
Cheers.